Hello, everyone. This is Chris Shea with Keller Williams Consultants and the Shea Group. And today I'm going to be doing our January 2026 real estate market update in Columbus, Ohio. It's been a while, got a lot of stuff to go over, so I want to dive right into it. First off, Columbus is growing rapidly compared to other market centers around the country. And this growth in our city and our metropolitan area is what fuels this real estate market for Central Ohio, which is a little different than it is nationally. And so at the Shea Group, we analyze a lot of the numbers, and I want to get into that and show you some of the numbers and what they mean and our interpretation of them. So let's jump into this is information I pull straight from the MLS here in Columbus, and I get data through the end of December 2025. This way we can do some comparisons to where we were the end of 2025 versus year over year results to kind of see the changes versus 24, et cetera. So as you start looking through these graphs, you can see number of listings over the year in 25, pretty typical, goes up through the summer. Then it starts to decline as you get into the colder weather, less properties coming on. Again, this is reflected too, as you'll see here, in absorption, which is inventory. Usually that builds and builds and builds. A lot of times it stays up pretty high through the winter. We are seeing stuff starting to get sold, and talk a little bit about what's creating that drop in the absorption, or basically inventory, number of months of inventory. Sold to list ratio, it's always lower in the winter. People are getting, coming on the market, getting better deals typically in the winter. But again, mid-year, it was mid 90s or upper 90s, still pretty solid. And then this is interesting, since July or June, pretty much a trend on days on market, again, going from mid 20s in June to mid 40s now. So things definitely taking longer to sell, which again is expected in winter. So nothing extremely shocking to look at when you look at the graphs, all pretty seasonal results. What I like to do is drive down here and look at the data and look at some of the year over year data. So for instance, when we look at these summary statistics, absorption rate, 2.1 months. That's how many months it would take to sell all the inventory we have on the market currently if nothing else came on. A year ago, we were at 195, pretty much right around 2. So we're a little above that. This is what's interesting. If inventory is going up, down here at the bottom, average day on market up 22% days on market versus a year ago. Well, year to date up 25%. Let's look at this versus this is just comparing December now to December last year. This is comparing the whole year to date versus the 24 year to date at this time. So up 25% on that, with the absorption rate of meaning, more inventory on the market as well, and taking longer to sell, prices should go down, right? However, if you look at this average sale price, 378 versus 367, we're still up 3% year over year in all of Columbus on pricing. So why is that? Why would pricing on average still keep rising when everyone says, oh, it's correcting? Because we were seeing 10, 11% increase in sales prices, average prices per year for several years. So the appreciation is slowing, but it's still positive, which that shows you the stability in Columbus. When inventory is going up, we're still in a somewhat seller's market where prices are still going up. Whereas in other markets, you're starting to see some corrections even below, with numbers lower than they were a year ago. That's really promising for Columbus's future market. And, again, down here in total sold, almost exact same amount of numbers sold for 25 to 24, off by 500 homes, over 30,000. So all pretty low there. I think the other big driving force is overall year to date, we've got more homes listed and coming on in this year than last year. But we also have, more actives. But I guess what's happening is, because the inventory has stopped coming on if you look at this up here, number of listings is dropping. So if there's less coming on, and I think it'll be better shown in this trend graphic. So let's switch over to this. So in trend graphics, another resource we use for data, this shows a year ago all the way through current. And these lines represent, the light green is for sale, listings on the market, the dark green are the solds. depending what's in contract, but typically it's how they're figuring that is a little off. So let's just look at the light green and the dark green. So if you look at December of 25, we had 4,300 homes for sale, and we sold 2,300. But if you look, as more and more were for sale, but less new ones coming on, then this sale line starts eating into that inventory. That's why this starts going down. So it's not necessarily a ton more coming on, but we're selling some of that inventory that's been sitting, and that keeps the demand up because we are not getting beyond yet 2 months of inventory, which is still pretty, it's, seller's market territory. So with that said, I think some of the numbers you can see down here also support that in trend graphics when you look at sales. Let's see. The harder part here is, since it does year to date, it's only going to show, it's January now, so it's only going to show this last month, which isn't as helpful. When you just look at this one, December now versus the same month a year ago, we're up 17% on inventory and still up 2% this December versus last December. All that means we've kind of leveled out, and it is a nice balanced market. We are expecting things to improve coming into the spring season. So what's going to help with the market? Well, a couple of catalysts that are currently, if you've heard on the news, one, rates just went down pretty significantly. And for the first time in a couple of years are under 6 conventional. We've gotten down to around 5.75% locally from some of our preferred lenders, even lower on FHA. So definitely more attractive as far as affordability goes on the rates. So that'll help pick up activity from buyers. In addition, obviously the spring season always helps. There's also a big push from the federal level to buy back a bunch of mortgages, bonds for the mortgages, and they sell those bonds, which then makes mortgages less risky and allows banks to lower rates. So hopefully we'll start seeing that affect it too. Regardless, I think it's all about affordability. And if we can get rates down, then the appreciation that we're seeing is going to continue in Columbus because of the demand will still be a good thing, but buyers will be able to buy because with rates coming down, the affordability will improve better than it is. So this is from, I've often talked about Altos. I get these Altos reports from any city, zip code, anywhere in the state. I could get information for my clients, our clients, we send it to them. So for instance, Columbus, Ohio, I click on this and we get this report and it shows, let's see here. This is basically an action index. It's showing a slight seller's advantage. Kind of makes sense. We're seeing again a kind of a flattening out of the median list price, doing the seasonal ups and downs, but now it's been pretty flat since summer. If we look at inventory, you'll see that's climbing, but now interestingly enough, dropping off here while stuff's getting sold a little bit over the last month or so. And that would also help keep those prices from dropping. So again, we analyze all these different data, see what those signs are telling us. We know that's showing basically a trend towards a more balanced market, but not a rapid drop off a cliff for a buyer's market, nor is it staying a robust get your offer in one day seller's market. It's kind of in, getting more balance in between, which is good for both sides really, to be able to work through deals, have more remedies, get things resolved at a more normal pace, which is what we like, helping find solutions for our clients and what best fits with what they're looking for. So I think a lot of this information kind of sums that up. One thing I do like to do now, like many of us, I go all in on AI. One of the things I like to use is I put a lot of this data into NotebookLM, and then I have it craft through my prompting specific information about the market. I made a nice, simple presentation, easy to follow, kind of give some of the trends and viewpoints of the market here in Columbus. So definitely reach out to me if you want more information on this. I can email this to you, this market update here that we have. Just reach out to Chris Shea at kw.com and I can send it to you. It's really easy to look through. You'll see it's just information about the market, some good information on data, trend lines, really explaining some of the data in very easy to understand terms. And so you can kind of get a feel for it, whether you're on the buyer side or the seller side, investment side, strategy for sellers, strategy for buyers. So yeah, just a lot of good information in here, very simple to digest. reach out via email, or you can text me if you like it, and I can also get it to you anytime. So that's it in a nutshell. What Shea Group is looking forward to working with all of you this year, and we're looking forward to a robust and exciting 2026 in the Columbus real estate market. Reach out to us anytime.